It's launch day. We're looking for a rocket in the markets. 30 minutes until the start of cash trading. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katy Greifeld. Bloomberg Open Interest starts right now.
Coming up, a record quarter for Goldman's equity traders as profit surges. We're going to have the latest in the big bank earnings bonanza.
Not off the hook. President Trump shifting his signal on tech tariffs, saying the reprieve is only temporary.
And bringing spice to space, an all-female Blue Origin crew set to take off later this hour. We'll bring you there live, but let's take a look at these markets. We have a few stocks on our radar. Apple getting some relief from the Trump administration's tariff exemption on certain electronics, including smartphones. But as Matt mentioned, it's maybe planning new tariffs on those products soon, according to the administration. You can see Apple shares up about 6%, Matt.
All right, Nvidia investors also relieved today. Trump says he's open to discussing the scope of coming tariffs with companies and their leaders. Nvidia shares up 3.25% in the pre-market.
And from tech to financials, lots in the green. Goldman's equity traders notched their highest quarterly revenue on record. Amid all of this volatility, CEO David Solomon remains confident going forward, he says, but investors are still waiting for commentary on tariffs that we might expect later in the earnings call, guys.
Tariffs on top of mind on Wall Street. President Trump says this weekend's tech exemptions are temporary, with more to come.
The tariffs will be in place in the not distant future because, as you know, like we did with steel, like we did with automobiles, like we did with aluminum, which are now fully on, we'll be doing that with semiconductors, with chips, and numerous other things.
You know what rate the semiconductor tariff?
I'm going to be announcing it over the next week.
Let's get the latest from Bloomberg's Tyler Kendall in Washington. So, Tyler, we are expecting tariff announcements on semiconductors this week.
Yeah, hey, Matt. Well, President Trump says that we could get more clarity on the timeline as soon as today, but it does appear evident that these tech imports, including consumer electronics, will be subject to a Section 232 investigation, which means that then this White House can impose tariffs based off of national security concerns. Now, typically, these types of probes could take anywhere to up to 9 months to complete, but it is very evident that this White House would like to see them put into effect sooner, and they have issued expedited timelines before when it comes to Section 232, including for the steel and aluminum tariffs, as well as the auto imports. And importantly, these past tariffs have gone to effect at a 25% rate. President Trump has said he hasn't given us indications yet on exactly which rate these will end up going into effect, but it is likely that it would be somewhere in that ballpark. We should also keep in mind that sector-specific tariffs are designed to be stacked on top of existing levies. And President Trump made clear that these tech imports are still subject to that 20% baseline tariff rate that's been in place against Beijing since February. Now, Matt, while this reprieve is considered to be temporary, it was seen as at least an initial victory for big tech as they sort of buy a little bit more time to work with this administration to try to get more permanent carve-outs. It's something that President Trump said that he was open to, particularly when it comes to specific products. He said that he wanted to show flexibility, but of course the big question is just how flexible will he really be?
All right, Tyler, great reporting as always. That is Bloomberg's Tyler Kendall. And don't miss an exclusive interview with Treasury Secretary Scott Bessent and Bloomberg's Anne-Marie Hordern today at 4 p.m. Wall Street time. But let's discuss a little bit more the company impact of these tariff exemptions and coming semiconductor levies. Bloomberg Intelligence senior tech analyst Mandeep Singh joins us now. So apparently there's more to come, according to the administration. And as Tyler just walked us through, we're talking about sector tariffs stacked on top of existing tariffs. And then you take a look at a stock like Apple just ripping higher this morning. A pessimist could say that that might end in tears.
Well, so look at what's transpired, in a week. We have had two situations where tariffs were increased, then they were rolled back. So I think the positive reaction is more that, okay, revenue and margins aren't going to fall off a cliff here because of the 145% tariff rate. But at the same time, I would argue, when you have uncertainty like this, and especially when it comes to Apple being a global company with, a large revenue base outside the U.S., like from a customer perspective, there could be a backlash in China, in Europe, where you could go for alternative smartphones or alternative, tablets, just as a backlash.
You know, Apple doesn't really feel all that global. When it comes to production, Dan Ives says 90% of its iPhones are made in China, and they have 20% fentanyl tariffs on already, plus the sector tariffs that they'll get on top of that. They're going to end up like Audi with the Q5 in Mexico, facing 52.5% tariffs. That is revenue falling off a cliff, or margins falling off a cliff, isn't it?
Well, the one thing I feel good about with Apple is the person who is running this company, Tim Cook, is the master when it comes to, managing the supply chain. That has been his specialty since the time he took over from Jobs. And I feel you will see him maneuvering this quite well. Apple getting on that exemption list and really managing expectations in a way where he has promised, $500 billion investment here in the U.S. And look, at the end of the day, it's in the administration's interest that Apple continues to do well.
Mandeep, we thank you for joining us this morning. That is Mandeep Singh of Bloomberg Intelligence. Of course, we will be keeping our eye on that story. But Goldman Sachs traders capitalized on market volatility last quarter, with equity trading revenue up 27% year over year. Top line revenue also beat estimates, and the board approved a share buyback upward of $40 billion. Let's bring in Citizen senior research analyst Devin Ryan on the financials. Goldman gave investors something to write home about with that buyback, and of course with another set of record numbers for equity trading, coming in above Morgan Stanley even. But can this continue given the type of volatility we've seen?
Hey, good morning, Sonali. So yeah, they had a great quarter. Diversification and durability are kind of the two themes we're talking about, and equities was a record. Clearly, results are backward looking here, but I think what is encouraging is that the volatility in the market actually is helping trading, and what we're hearing thus far into the second quarter is that that's continued. So I think as long as the volatility is somewhat orderly, which it has been thus far, then that's actually really good for trading. And then the flip side is investment banking, has had some challenges with this type of volatility, but we're kind of framing this as a coiled spring. So there's a lot of, I think, appetite to do things as soon as the markets do settle down.
And Devin, something I'd love to get your perspective on is the fact that the provision for credit losses at Goldman actually went down rather than up. The exact figure for this year's first quarter is $287 million. Compared to a year ago, it was $318 million. I wonder what you make of that.
Yeah, I wouldn't read too much into that. They're exiting some of their legacy, consumer kind of relationships, and so that's a piece of it. But just there's really, I think, nothing to point to yet in the market that I think is concerning on credit. We're obviously watching the next couple quarters here in terms of just how things play out in the economy, but thus far really haven't seen any cracks. And just with CECL accounting as well, I think positive that they're not really seeing anything that's concerning from their end.
I just want to tell our viewers, in case you're wondering why we're bringing you the Kardashians there in the corner, it's because we're waiting for a Blue Origin launch. Jeff Bezos' space company is going to take a number of women, including Katy Perry, up to space, and we're going to bring you that launch live when it happens. I'm not sure of the Kardashian connection, but
it's Kris Jenner. She's the mother.
Right. No, I meant why is Kris Jenner?
I believe she's friends with Lauren Sánchez.
She's friends with Lauren Sánchez, who is, I guess, dating or married to, I'm not sure,
she's
Jeff
the
Bezos.
Fiancee of Jeff
Bezos. And maybe everyone's wearing Skims as well. So let's get back to Goldman Sachs. The challenge, I guess, is investment banking, Devin. Obviously, this kind of volatility, great for trading, not so much for deals, definitely not for IPOs and leveraged loans. But I thought it was interesting. Sonali tells me the investment banking fees backlog has grown quarter over quarter. How is that in this situation, and can they keep it up?
Yeah, Matt. So I think it's a little bit of a combination of just not as much got done in the first quarter. So that business carries into the second quarter. But I think Ted Pick said it well on Friday. This right now in their mind is a pause, not a delete. So right now, I think there's a lot of appetite for corporations and sponsors to move forward on strategic plans. And so the market conditions just haven't been there. But just for context, the market has been incredibly challenged the last 3 years. under some of the analysis we do, we estimate that sponsors can double their level of M&A activity and just get back to kind of a normal historical baseline. IPO activity could far more than double and just get back to kind of a baseline. So there's a lot of pent up, I think, appetite to do things in investment banking. It's just you need markets to settle down. But our view is that stuff's not going away. It's just getting pushed out here a little bit. And then when markets inevitably will settle down, and then there's a lot of tension that's building for these companies and sponsors to get on with their strategic plans. And that's kind of what we're waiting for here. So it absolutely is going to come. It's just a matter of when, not if.
All right, Goldman shares up over 3% pre-market. Our thanks to Citizens Senior Research Analyst Devin Ryan. Quick check on these futures right now. You can see we're green in the pre-market, up 1.6% on the S&P 500. That's coming off the best week since 2023, though. It certainly didn't feel that way with all of the volatility. We'll continue to discuss that. And coming up next, Pfizer shares lower today after abandoning development of an obesity pill under trial. We'll give you the details next. This is Open Interest.
Let's get now to high interest and look at what's making headlines around the world. White House National Economic Council Director Kevin Hassett has completely dismissed the idea of a recession. He told Fox Business earlier 100% no recession this year, citing the strong jobs data out earlier this month. Hassett's statements counter some Wall Street forecasts of an economic downturn resulting from the steep tariff hikes imposed by President Trump. Intel will sell a 51% stake in its programmable chips unit Altera to Silver Lake Management at a valuation of $8.75 billion. That means half of that is what they're going to get paid for Altera. The deal is expected to close in the second half of 2025. Remember, Intel bought Altera 10 years ago for $17 billion, so double that valuation. And by the way, as a footnote here, Nvidia just said it will produce supercomputers entirely built in the U.S. And Pfizer will stop developing an obesity pill that was closely watched by investors. It's a severe blow in its efforts to compete with Novo Nordisk and Eli Lilly. The treatment was linked to a potentially drug-related liver injury in one patient who was enrolled in a clinical trial. Pfizer has been trying to compete in the obesity market as part of its post-COVID comeback plan. Katy?
Let's just marinate on Nvidia for a moment there. That coming from a blog post on the Nvidia website, again, that Nvidia is working to produce an AI supercomputers entirely in the U.S., that mass production at its Texas plants will ramp up in 12 to 15 months. Sonali, you take a look at the shares right now. They were already higher on the day and now moving a little bit higher in the pre-market on the heels of this news.
Yeah, it's a very interesting set of moves by corporate America. Of course, capital intensive. Let's see where they get all that money from. But of course, investors are reacting well to the news. To your point, they have already been up. They are commenting in their own blog post. They also plan up to $500 billion of AI infrastructure through partnerships with TSMC, Foxconn, and others.
Yeah, really interesting move there. We'll bring you more details as we have them. But let's get back to the details on that Pfizer story, that Pfizer is abandoning its obesity pill after a liver injury in a trial. Bloomberg's Damian Gard wrote the story and joins us now. And Damian, is this truly the end of the road for Pfizer's foray into obesity pills? Because this was really one of the big gems that they had in their pipeline.
This is the end, at least for that particular pill, which was their effort to play catch up with the likes of Lilly and Novo, who have been leading this market as we've witnessed its explosion in demand. Pfizer is not out of the game yet, per se. They do have earlier stage oral assets that could one day advance to the point of the market, but this was their best chance to even kind of get one on the board. They still would have been more than a year behind Eli Lilly in terms of an oral GLP-1 weight loss treatment, and now that year, I mean, now the extent of the distance that they're behind their competitors is at least 3 years. So
no oral replacement for an injectable fat drug, but do they have anything to counter obesity, as well as we see from Novo and Eli?
They have phase 1 assets, so assets that are really just being tested in healthy volunteers that are years away from the market. And I think that's why this morning with the Pfizer news, you've seen the shares of some smaller biotech companies going up that have later stage potential weight loss treatments, because the assumption is Pfizer might go out looking to buy a company in order to hopefully make up that ground that it's already lost.
Well, that was going to be my question, because the Pfizer of the past might have already bought one, right? So what's out there that you could see being folded into Pfizer's portfolio? And at this point, would M&A be pretty difficult?
Well, that's the thing. So the leading candidates are companies like Viking Therapeutics and Structure Therapeutics, both of which have oral weight loss treatments that could fit into Pfizer's pipeline and at least help it catch up on that timeline, if not be able to actually compete with Lilly and Novo. The issue Pfizer has is that they've spent a lot of money since the COVID pandemic. They outlaid a lot of acquisitions, hopefully to extend the revenue stream as the vaccine and treatment for COVID-19 dropped off. Those haven't really panned out, and what they've left the company with is a lot of debt and a promise to the street to cut spending and get that debt down. So now Pfizer's M&A firepower, they've said between $10 and $15 billion, but people are looking really closely at that balance sheet of could Pfizer do, as you mentioned, the Pfizer of the past probably already would have made a blockbuster acquisition. Can they actually afford to do the kind of thing that they once would have?
Well, talk to us a little bit about the landscape when it comes to obesity drug pills, because you think about Viking Therapeutics obviously popping quite a bit in the pre-market here. I'm not saying that they would go out and buy Viking, but what are some of the options?
Yeah, Viking and Structure are the big ones. There are a few earlier stage assets out there. We saw Merck recently go to China to license an early stage oral GLP-1 treatment. Those deals are probably more sensible and certainly more affordable. The issue Pfizer has is this issue of immediacy. Merck can afford to take time in this process. Pfizer, at least the perception of Pfizer, is that they've already wasted so much time in trying to catch up in GLP-1. So there is a sense of immediacy that could drive them to go for a bigger deal.
All right, Damian Guard, great reporting as always. Really interesting news out of Pfizer this morning when it comes to the obesity pill landscape. But let's talk a little bit about what's coming up in about 12 minutes time. We have that all-female Blue Origin flight to space that we're looking forward to, or at least slightly above the Kármán line.
Yeah, the space race seems to be among many of the things happening in the world today. For the case for U.S. exceptionalism, one of them. It reminds me of another era we once saw.
Is it really space? I mean, they're just going to fly up really, really high.
I have some stats for you.
I feel like you need to go into orbit for it to really count.
They are, going above the Kármán line. That's about 62 miles above sea level. But you think about the International Space System, that is at 250 miles above sea level. So it's certainly a hotly debated point. But I'm sure we'll get into all of that with
They'll experience weightlessness, basically, for like 3 minutes.
Yeah, zero gravity.
They'll float around. I'm not sure, do they get like a marble, the Earth is a marble kind of view out their windows?
You would have to ask Ed for that. I would imagine at 62 miles above sea level, I'm not quite sure.
We will have Ed Ludlow on a little bit later, who knows literally everything.
Our rocket man.
About space.
If you will.
Yeah.
Sonali mentioned U.S. exceptionalism. I'm going to try to do this pivot. Citigroup equity strategists are the latest to sour on U.S. equities, citing high valuations and EPS downgrades. Citi lowered its view on U.S. equities to neutral from overweight, saying, quote, the drivers of exceptionalism are fading, both from a GDP and an earnings per share perspective. So let's discuss that now with RBC Capital Markets Head of U.S. Equity Strategy, Lori Calvasina. Lori, great to see you in person.
Thanks for having me.
So that's the existential question, isn't it? Whether the U.S. is still a safe haven, whether U.S. assets still hold their appeal relative to the rest of the world. After the past few weeks, the past few days, the past few hours that we've gotten when it comes to U.S. trade policy, where do you fall on that?
So look, this has been a big point of debate. I'm a U.S. equity strategist, so I joke that I always like U.S. equities, right? I'm not a global person. But the reality is that if I think back to December, I was in Europe seeing investors the week before the holidays, and I got an earful about how expensive valuations were, how frothy sentiment was. There was a lot of concern about tax being overly optimistically assumed, and tariffs, not enough conservatism baked in there. And so, right, a lot of this stuff has panned out. But I heard a lot of people saying we want to own the U.S. through Inauguration Day and then sell thereafter. And guess what? That's worked pretty well. We have seen in funds flow data evidence of European-based investors in particular selling the U.S. and moving into Europe. That did shift away from rotation to just kind of more of a general de-risking towards the end of March. I do think that the door has been open to look at things other than the U.S. I'm not saying that there's not an opportunity to buy the U.S. in here, but I do think, that some things were shaken out, and I think this is actually healthy for global equities to see other, geographies being looked at, frankly.
Do we have a recession ahead in the U.S. or even the possibility of a recession? Because Kevin Hassett was on Fox this morning and said 100% no, which is so many percent, right? And then he said the CEOs he talked to say that uncertainty over tariffs is not a big drag, and that, in fact, they're just moving everything they can onshore.
So I think it's one of those situations where it depends on what data you're looking at and who you're talking to. And I will tell you that I did look across the Russell 3000 and the S&P 500, just everything that's come out, whether it's conference transcripts or earnings transcripts since Liberation Day. And it's, we said in a little note we wrote this morning, a recession's not a foregone conclusion in our mind, but at the same time, we don't think U.S. equities are out of the woods. And I think, unfortunately, sometimes things are murky, and that is just where we are right
100%
now.
is not murky. 100% is like pretty clear.
Yeah,
right?
To me, it's murky. And I'll tell you, on the one hand, when I look at what companies have been talking about with tariffs, I do get the impression a lot of prep work has gone in. There's been some pre-buying by consumers. There's also been, moving inventories around. I did read one company that talked about how they were in China. They're shutting stuff down there. They're moving to the U.S. But other companies are not saying the same thing. I'm not seeing companies saying they're about to do a ton of layoffs. That being said, when I look at the soft data and the survey data, in a variety of surveys, both consumers and corporates are reporting an eroding outlook for the labor market over, kind of the next 6 to 12 months. So you have to take that seriously.
Also, just to follow up on 100% recession is not murky. I mean, even if we don't have a recession, you could have a period of really low growth, high inflation. Even if we're not at the NBER defined threshold of recession, it could be pretty ugly out there.
Literally the first thought I had this morning when I saw that.
And look, Katy picks up on an important point, because when I back test equity returns for different GDP environments, guess what? Negative GDP, which is most consistent with a recession, is actually typically up in equities. What we tend to see with the S&P 500 is that you tend to fall in the 0 to 1% range, in the 1 to 2% range. Equities do not like being on the precipice and being stuck in sluggish growth, where you're constantly worried about tipping into a recession. And by the way, when you have one, you price it in ahead of time.
But Lori, do you have any confidence based on what you're seeing so far in earnings season? The banks came out pretty clean. The provisions were not that much higher. When you looked at JP Morgan, of course, we have 2 more tomorrow. The tide can turn. But
wait, who's tomorrow?
Citigroup, Bank of America.
Okay.
So 2 very important ones, but you have not seen real signs of stress besides words of caution.
Yeah.
Is there anything to grab onto there?
No, I think that's fair. And, if you even go back to the SVB scenario a few years ago, I mean, companies came out very quickly, especially on the banks, and said, we learned a lot from the GFC. We kicked into high gear over the weekend and we managed through. And there have been so many other instances since 2018 where companies have, successfully navigated through. And I think you're seeing some signs of that now. I will caution, though, that back in the 2018 trade war, initially there was a lot of optimism on the ability of companies to manage through, and things held up pretty well. And it was really September after Labor Day, before, I think it was like that 3Q reporting season. Companies get out to all these sell-side conferences, and they waved, kind of the caution flag then. So it may just take time.
Speaking of time, you had President Trump coming out into the weekend, rather, removing some of the hurdles on critical industries here when it comes to tariffs, and then the Commerce Secretary right away saying this is temporary. When you think about that, how much uncertainty does that create for companies like Apple? I know sectors like Apple operates in, the semiconductors more largely. How do you think through that?
So it's funny. I was actually talking to somebody about that on Sunday, who and someone internally. And when I saw the news on Friday night, what instantly came to my mind was that growth in tech had already been acting better post the Rose Garden, and so and also I think value comes under pressure more from an earnings perspective in a sluggish economy, and you want kind of more secular growth, right? So I was like, okay, this is just something else, right? That's going to come in and kind of power that growth trade, which has had this sort of sneaky outperformance post the Rose Garden. And then we got the news on Sunday, and what popped into my head was, this is not great. I will confess, I bought my 4-year-old a Panic iPad because his is on his last leg, and if you've met him, you don't want to take that away.
Don't mess with his iPad.
Don't mess with the iPad. But in all seriousness, I said, look, it seems to me like we took 2 steps forward and maybe 1 step back. So I don't think that was necessarily a great development for a fatigued investment community that's still trying to make sense of this. I think that was frustrating. But at the same time, I do think that last week we saw, I don't want to use the word pivot, right? But we did see a shift and a beginning of dialing down. And, this is, we're still headed in a better direction.
Headed in a better direction. I want to talk about what's coming up, though, and that's earnings, because you saw Citi, of course, downgrade their EPS estimates. You saw something similar from Mike Wilson over at Morgan Stanley. A lot of folks have told us that there's more to come when it comes to earnings estimates, downward revisions. What do you think?
Okay, so I think about this very differently, and I have a little bit of PTSD from early 2023, when the argument that was going around was that the stock market could not possibly have bottomed before the recession has even started, and there was this big view that you had to have this slash to earnings estimates, and the stock market couldn't bottom until that happened. There's a little bit of truth in that, but there's also a little bit of something that's a little bit off on that. And what we look for is earnings sentiment and the rate of upward revisions. So if you are not in a crisis, right, if it's just kind of a stressful period, you want that indicator to go down to 30%, and then it can start to move back up, and that can help stocks heal. We do agree with the idea you need to reset expectations before you can have a durable bottom, because people have to believe PE. So I get that. But in a major crisis, we've gone back and looked at this, and the rate of upward revisions, earnings sentiment tends to bottom out between 10 and 20%, and that is when stocks bottom. Not when you go back up to more than 50% upward revisions. People always want to wait for that and miss the bottom. You want to see that second derivative improve and earnings sentiment take the hit and then start getting less bad. That is your opportunity to buy a bottom in the stock market, and people always get this wrong. So if we are setting up for the same kind of, bad argumentation to filter through markets again, we're ready for that argument.
Lori, it is great to have you on with us. RBC's Lori Calvasina. I'm always happiest when you're on with Nathan Hager in the morning, so that I get this primer before I get to work. But we'll take a hit on our show as well. Blue Origin is preparing for its 11th human space flight. The NS-31 is an all-female crew, which includes Katy Perry, Lauren Sánchez, and Gayle King. For more on the flight, we're joined by Bloomberg's Ed Ludlow. And Ed, just to be clear, I realize that the Kármán line may officially denote space, but to me, you got to be orbiting, really, before it counts. What do you think?
Right, from liftoff to touchdown, this is an 11-minute process, 11-minute flight. And I love the data that you guys were, let's say, discussing, debating. Katy makes the point correctly that the International Space Station is about 250 nautical miles above the Earth at any given time. They're going to go to the Kármán line, 62 miles, the sort of internationally agreed boundary of space, but it's like less than 3 minutes. You unbuckle from the seat in the capsule you're looking at in your screen, float around a bit, you get a 1-minute warning, and you get back in. Compare it with, for example, what something like SpaceX has done with the Inspiration 4 or Polaris Dawn missions. Polaris Dawn had an apogee or peak altitude of about 800 miles, way beyond this, but still, it is technically space, and the bigger picture is that it's supposed to make it seem accessible to more people here on Earth.
Right. Well, Ed, just really quickly here, because we are awaiting this launch, but compare that, for example, to Virgin Galactic, which does not actually go to the Kármán line, and you've seen Virgin Galactic and Blue Origin trade some barbs around that.
Yeah, and Virgin Galactic struggled operationally and as a business. Look, the big picture is that this is another player, not just giving humans the ability to go into space, but it's a reusable launch system. And generally, the big picture that the industry says is look at what they're doing. The more the cadence increases, it's demonstrating that commercial space is making some progress.
Commercial space overall, but can you just give some more context on where Blue Origin stands in this space race?
Yeah. So this is a kind of smaller part of its business, right? Celebrity, rich people tourism. They want to sell their engines to other players, and then New Glenn, their main rocket, is way behind.
Here we go.
Let's listen into the countdown.
Internal. T-minus 10, 9, 8, 7, 6, 5, 4. Command engine start. 2, 1. Ignition. Liftoff. New Shepard has cleared the tower. 1. Vehicle is supersonic. Engine back up to full throttle.
Supersonic, we have passed through max Q.
Accelerating through
dynamic
800
pressure.
miles
That's
per
when
hour.
the vehicle,
Max
the
Q.
stresses between the atmosphere and the speed are at their maximum. So to punch through that is so important. You see the BE3 engines is firing beautifully. You see the stream of steam behind it. Those ladies right now are having an incredible view.
Okay, so we passed max Q. That's the moment where the combined booster and capsule is under the most sort of aerodynamic stress or pressure. It's accelerating right now about 1,400 miles per hour, and it will hit a top speed of 2,200 miles per hour. When you pass that kind of like 2,000 miles per hour stage, which is going to happen any moment, that's kind of supersonic speeds. It's the max speed that you're looking for. And in about 30 seconds time, it will then stop. It's kind of reaching its altitude. And so the main engine on the booster will cut off. And quickly after that, the capsule and booster guys will separate. And the capsule basically relies on the momentum of the launch to carry it to that stage. And that's kind of what you're looking at now, that separation. I think, again, let's go to the big picture. Of all the humans and people that have gone to space through history to date, only around 15% of them have been women. This is an all-female crew. And a big part of the mission is to, again, make it seem accessible, although it helps knowing one of the richest people in the world who owns the space company, right?
Yeah, absolutely. I think we're all pretty much in awe here. We're not in tears like Oprah, but we think that is pretty cool. Is it fair to say we all think that's pretty cool?
Yeah, it's
to
pretty
watch
cool.
that.
I mean, it's pretty cool. To Ed's point, I mean, this is a sort of side project of Jeff Bezos in the sense that, you know, right now it's just sending rich people to space. But I mean, Ed, you think about sort of the ambitions here, commercial space travel. That's certainly something that it seems like with each of these flights is getting closer to reality.
Right. You know, Sonali's question earlier is really important. Like, what is the business model of Blue Origin? And just like SpaceX and Elon Musk, Jeff Bezos has this kind of bigger picture vision where people, humankind, call it what you will, work and live outside of Earth's atmosphere. So yes, this is sort of the lower level version of that. You know, we don't know for certain how much Blue Origin charges per seat, for example. It ranges from several $100,000 to more than $1 million, depending on your relationship with Bezos. Right now, we're almost 4 minutes into the mission. They're probably about 60 seconds into that sort of weightlessness, zero-G environment. And in about 60 seconds time, you know, the crew inside will get the instruction, because this is a fully autonomous system. There is no sort of Blue Origin staff member or pilot inside. They'll get the instruction to get back into their seats and their harnesses to fall back down to Earth. Away from this is the 11th human spaceflight, as Matt pointed out. They have a bigger rocket called New Glenn, which is just, in short, very behind schedule. It was supposed to launch for the first time 5 years ago and launched in January of this year. It's encountered technical delays. And then they manufacture BE4 engines. The BE4 is not on this system. It's a much bigger rocket that runs on liquefied natural gas. And their hope was that, particularly in the context of the war in Ukraine, to be able to sell those engines and displace the Russians who are no longer able to sell theirs. But right now, you have 6 celebrities, frankly, floating around in zero-G and hoping for a safe return back to Earth.
Speaking of their return, Ed, telegraph how the rest of this flight goes.
Yeah, so essentially the booster is already making its way back down. We're 5 minutes into this mission, and in about 2 minutes' time, the booster will come into greater view, and it will land on a platform a short distance, basically, from the launch pad where it took off. And it essentially free falls, keeping itself and righting itself using thrusters, and then the main engine reignites right at the last minute, just before landing, and comes up in a sort of puff of dust and smoke in that West Texas desert. This is old school spacecraft in the sense that the capsule is gumdrop shaped or teardrop. It has a flat bottom. So initially, when the capsule re-enters Earth's atmosphere, it's in free fall using the flat surface and its own aerodynamic resistance to slow it down. But of course, there are chutes that get deployed to make it a really comfortable, kind of more moderate few miles per hour by the time it touches down to Earth.
Ed, I don't want to take too much away from this because it did look so cool, and I'm sure it's super fun. sitting in that capsule. But it just doesn't seem like they're even fractionally as far along as SpaceX. Why is that? Is it just that Elon Musk has put so much more money into his effort, or have they actually done better than Blue Origin?
So what's really interesting is Blue Origin first did its reusable booster in November of 2015. SpaceX did it a month later in December. So they actually kind of got a head start on the reusable landing of booster thing. But yeah, it's kind of a talent issue. You know, it's well documented that Elon Musk, you know, just went through hell with that team in the early days of SpaceX, very near to bankruptcy, and literally picked up the debris from failed missions to try and start again. This is the booster right of NS-31 in free fall back down to Earth. Any minute now, it will slow itself very close to the ground simply by reigniting that main single-engine BE3 engine at the bottom. The fuel source, by the way, guys, oxygen and hydrogen on this one, not kerosene, not rocket fuel. And there you go.
Yeah, and for the non-space experts out there, of course, the crew isn't in the booster, which just landed right now and is creating that big dust plume. They are, of course, in the capsule, which has yet to land. Ed, you were talking
and
a little bit.
And they hit so close to target. I mean, that's super impressive,
right? It is very impressive. And we were talking about sort of the space race with SpaceX, but talk to us a little bit more about Virgin Galactic. I know that they have plans for an upgraded space plane in summer of 2026, which certainly feels far away from right now, but that would mark their return to semi-space.
Yeah, so Virgin Galactic has like a completely different technology, right? It is a spacecraft that looks like a stealth bomber kind of plane that flies on the fuselage of a custom airplane that takes it to altitude, and then it drops from the fuselage of that plane like a rocket, basically, or in the military context, and shoots in an arc upwards to space. But they've just also not been as successful as Blue, right? Blue is what you'd call like a full-service space company. So what you're looking at is New Shepard, named after the man, of course, that first went to space. That's the capsule in free fall, right? And it's traveling now at an altitude of around 6,000 feet above the Earth. Those first shoots that deploy, they are drogue shoots. So they're initial burst of drogue shoot that slow it down rapidly at first, and then the main shoots will be deployed as a consequence. There you go, coming out right now, traveling like a 100 miles per hour and slowing down really quickly. Now, Matt, Katy, and Sonali at a leisurely 40 miles per hour.
Just incredible. I mean, as you were saying before, one of the fun things about this is not just the launch itself, but who's in it and the relatability. Katy Perry, Gayle King. What does this mean for the development of space flight for people who are not as familiar for going to space?
Yeah, look, super healthy to be skeptical as well, right? That Lauren Sánchez is Jeff Bezos' fiancee. She said in 2023 she was going to do an all-women mission. She's done that as it stands, and go back to the data that prior to today's mission, depending on how you define space, only 15% or so of all humans have gone to space are female or women. So that addresses that directly head on. But the big picture is that it's supposed to make space seem accessible. Now, when you think about the people actually inside, they're friends of the Bezoses, right? And we don't know how much people paid. What we do know from the reporting is it depends how good your relationship is with Jeff Bezos. It could be a matter of $100,000, $200,000 to more than $1 million. Although, if you go on Blue Origin's website, anyone can put a deposit down. Guess how much it is, guys? $150,000. I don't know if you have that kind of change. I don't, but let's just be clear. This is largely inaccessible to the vast majority of people around the world, right?
Right. I do want to point out Lauren Sánchez, of course. She's the fiancée of Jeff Bezos. But, Matt, she is also a licensed helicopter pilot. She founded Black Ops Aviation. That is the first female-owned and operated aerial film and production company. So she has a bit of experience, more so than the average bear, when it comes to at least flying things above the ground.
It looks like Jeff Bezos is the only dude there. I will say it's incredibly impressive to me that they landed the booster almost bang on target. And then this has gone so well. We're waiting, of course, to watch the pilots, or I guess are they astronauts now, Ed? Get out of the capsule.
So interesting. I got an email from a colleague in the newsroom who will remain unnamed saying, please don't say astronauts. They are space tourists. But let's call them crew. It's a fully autonomous system. There are no controls for them in there, only two-directional communications, right? So other than when they're in the seat, when they're floating around, there isn't anything for doing there. I heard you guys ask a question earlier, which is, what's the view like from the top? I mean, you'll see images emerge, right, because they take recordings on the GoPro and stuff, but it's not a marble-sized thing at all. You know, the Earth fills the window, you know, because as we keep pointing out, 62 miles above the Earth, while technically space beyond the Kármán line, it's not that far.
Ed, you and I were kind of sidelining on this, and what does it mean for American scientific development, right, to see so many private flights make their way into space?
Yeah, I've probably had 50 or so conversations about exactly this in the last week, and I think people generally accept, okay, Blue is not as far ahead as SpaceX is. SpaceX dominates 2/3 of payload to Earth, but it is important to have another private sector name having success, having more regular launches, giving people confidence that they can safely transport humans in and out of space, so to speak. But I also say track the delays that Blue Origin has, the problems with New Glenn and some of the satellite clients that have been left waiting in the wings for that technology, for example, Amazon and its satellite businesses. And also the hope that Blue Origin was going to become a great vendor of rocket engines, the BE-4, when the Russians were no longer able to sell them to American businesses in the face of restrictions and sanctions stemming from the Ukraine war. That part, the bigger commercial part, hasn't really panned out to the way that Blue had wanted.
Well, that's what I wanted to talk about, because you think about how much further along SpaceX is. You know, when we think about the ambitions to maybe, you know, transport things to space for the government, for NASA, taking over a little bit there. I mean, is that a stated ambition of Blue Origin? It seems like they're best known for these sort of high-profile flights to semi-space just above the Kármán line. But you mentioned all the issues and production delays that they've had. I mean, is that eventually where they would like to go?
It's exactly where they want to go. I mean, with New Shepard, the smaller system that you've just been viewing that can carry humans, they also do some non-human flight payload, very limited experiments where you can test certain things in zero-gravity environments for just a few minutes. Virgin Galactic also has a similar pitch, right, which is we don't just carry people up, but you can send up experiments in weightlessness. The issue is really the money's in the satellite business, not just small sat in terms of like rideshare like SpaceX does, but large military contracts for anything relating to intelligence, to weather monitoring, to communications, and of course, you know, with Starlink and Amazon going after that market of space-based internet, that is an area that they want to target with New Glenn as well. Let us forbid we talk about sort of what happened with Boeing and Starliner, but of course, in the future, with the ISS being decommissioned, Blue also has, you know, ambitions to carry astronauts on behalf of that agency to space and participate in humankind's activities on the moon and further afield. But right now, you know, that's the part of their business where the technology is not meeting their hopes.
Ed, what is the crew doing in there? I mean, we're looking at the capsule, and they seem to be still sitting in their reclined seat positions. Aren't they going to take off their seatbelts and get out, or do they have to wait for somebody to come and open the door?
Yeah, so there are procedures with all of this. Right now, there is a fleet of Rivian vehicles, because remember that Jeff Bezos was a big motivating factor in Amazon's investment in Rivian. They're hurtling from the base towards the capsule. There are medical staff included in that convoy. They open, there, you can see them arriving in the background there. They open the capsule. They will have already done audio confirmation with the crew that they're okay. You can see people inside. I can't tell who that is through the window. But that gives you a good sense, actually, about the scale of the window. Like, you go up for 3 minutes to look out and see the Earth from that perspective. You know, also kind of stating the obvious, they have to wait for the dust to settle, literally, not metaphorically. And there is some heat components of the capsule because of the aerodynamic resistance of the Earth. But I think they're all okay. And if they weren't, we would have heard otherwise.
Dare I ask, maybe it's early, but what's next for Blue Origin?
Good question. I mean, Dave Limp is the CEO of Blue Origin. Jeff Bezos is the founder, but he is not the CEO. And the target that he set out this year is just basically to ramp up the number of launches on this particular business line commercial space tourism for rich people. But they also are targeting between 6 and 8 launches of New Glenn, the much bigger system. So they said that. That's the problem when you're an executive and you set a target for a calendar year. We know what it is, and whether they meet that or not, you guys can check in with me on December 31st of this year.
Yeah, and when it comes to what's next for Blue Origin, you mentioned Dave Limp. He also says that he wants to land an uncrewed vehicle on the moon in 2025, right?
Yeah, and so Blue Origin was part of the competitive bidding process to be involved in the engineering of the landing system. There are many different sort of phases of that contract, but what I would say is, remember, we don't have a fully confirmed NASA administrator yet. Jared Isaacman's been through the preliminary version of that process, but it was so interesting, the focus of Ted Cruz, right, saying, do not get too distracted by Mars. We want you to get America back to the moon, and Blue's a part of that process, as long as that is NASA policy going forward.
There seem to be so many Kardashians. I can tell, so I can spot Bruce Jenner's ex-wife there.
Kris Jenner.
Yes, and then
Khloe.
That's Khloe Kardashian, right?
Khloe Kardashian, yeah.
Do they work closely with Amazon, Ed? Or are they just friends of the crew, or what do we?
So I can tell you that they are there in support of, I believe, Lauren Sánchez and Katy Perry. I can also tell you that the reason Kim Kardashian is not there is because she has an exam, a legal exam coming up. She's trying to become a lawyer, as you may know, and so she's studying and couldn't be there for this launch. But yeah, that's what I heard this morning.
Meanwhile, Kylie Jenner isn't there because she was just at Coachella with Timothée Chalamet. I can't speak to where Courtney and Kendall are right now, but it's interesting. You have to imagine it would be good for the Kardashian TV franchise if they sent up Khloe, or at least some of them in there. Apparently, our producer tells us that Khloe says that she's enticed to go up. So, I mean, it's also this big production that we're seeing here, Ed. It's kind of advertising, too, for whoever wants to pay the price tag.
That's exactly what it is. And let's be honest about this, right? I always think to myself, okay, we're carrying this mission in full here on Bloomberg Television. What are people going to think? There are people that watch our network that may have $150,000 for the deposit. By the way, if you're that person and you're watching and you do put down a deposit, phone me. I'd love to talk about that. Find it so interesting. But again, how much the ultimate per seat ticket price is, we don't know. What we do know is it really depends on your relationship with Bezos and Blue Origin and who else is in the mission, right? So this was Lauren Sánchez, Jeff Bezos' fiance, being the big driver of this mission. She said in 2023 she was going to do it. They've completed it, and she assembled the crew. And we just don't know, like, if they were charged for it, if Jeff Bezos comped them on the seat. But it is a rich person's sport at this stage. With the bigger picture, if you accept it, that they want to demonstrate that in the future, whatever timeline that is, space will be more accessible to everyday people.
Well, actually,
this is the time. No, you guys ask me now, would I go? No, I would not go. I feel pretty happy down on Earth. What about you?
Well, my question is, if you were a betting man, do the prices go up or down, given the success of a launch like this and the marketing around it? Wouldn't the prices just go higher, speaking to the rich man sport?
I mean, it's a great question. I don't know what the sort of tariffs and trade disruption story is around space. You know, the fuel on New Shepard is liquid hydrogen and oxygen. The byproduct is water. It's not kerosene. Jeff Bezos bankrolls this company, but there are other outside investors. Like, are they sort of sensitive to margins on a mission like this? I highly doubt it.
Ed, I'm surprised that you wouldn't go. I mean, of course I would go in a heartbeat if I were standing around and somebody said, hey, do you want to jump on top of this rocket and get launched above the Kármán line for 3 or 4 minutes, experience weightlessness, look back at the Earth? How would you decline that offer?
Well, my starting answer is also that I don't have the wedge for it right now, but I like it here on Earth, right? There's enough technology in my life every day where I'm like, this is pretty sweet. California's nice. I'm comfortable, and I just, I like high-speed vehicles on Earth like you do, and I just don't feel ready yet. That's the truth. I just don't.
Yeah, Ed, I'm with you. You could not pay me money to get into that thing.
Seriously?
Yeah, I love being alive. Not that, we've seen anything horrible happen here, but there's always a risk, of course, when you get on any flight, let alone one that's going 62 miles above sea level here. So, Ed, again, just to bring us back to these images, it looks like we're getting closer to opening. We know that the recovery crew, friends and family have arrived towards the capsule. They were removing the air cushions, the parachutes. It looks like we're getting pretty close to opening that door that we're staring at right now.
There it goes.
Yes, and this is the moment we can watch it, listen in. I think that's Jeff Bezos on the left. He's taken off his jumpsuit or overalls and is now wearing jean t-shirt combo. It's a very different gig doing this to covering financial markets and technology stocks. You have to really be into fashion, and I just got an IB saying, wow, we have a Kardashian correspondent. But yeah, they all smiles, everyone seems safe, and you know what happens next, based on my experience of going in July 2021 when Bezos went up, is that there is just endless hours of press conferences and interviews describing the experience and what it was like.
I just want to see them get out of this capsule. I mean, they opened the door briefly and then closed it like they weren't quite ready yet.
Just a sneak peek.
Jeff Bezos hanging out with, looks to be Christiane Amanpour. I'm not sure who's standing there, but they've got a full camera crew. I mean,
he's got something in his hand.
I have to say, the payoff is going to be the look on Katy Perry's face, right? Isn't that what we're all waiting for? Like, how excited were you? How cool was that?
Hopefully they'll have her song E.T. playing, but it does look like we're getting close.
I can't have gone through the last 12 or 13 minutes and then not see them get out of this capsule, is I think what I'm saying here.
Do you think the viewers agree?
Stay on it a little longer. I know.
I mean, markets aren't doing much. We're up 1%. The VIX is back down to 30.
We can verbal this.
The dollar's down. Gold is down. Everyone's chill.
There's a massive sigh of relief in the markets. We can tell the audience that much while we wait for the crew to get out. But yes, I agree. People want to see their faces.
Yeah, I don't know if it's hard to know what to call this, because in any other environment, a 1.3% rally on the S&P 500 would be huge. But I mean, relative to the past couple weeks that we've lived through, relative to maybe the news that we got this weekend, it's not impressing me.
I'll remind everybody that we're not even back to 5,500 on the S&P. So this is good, but not great, right? At 54.35 as we stand. I want to see Lauren Sánchez and Gayle King get out of this capsule. I feel like they've been in the capsule on the ground now longer than they spent going up in the air and coming back down.
I don't think that there is an issue, guys. I don't think that there is any sort of emergency event, like they can't open the door or someone's stuck or anything like that. I think that, as fast and fun as the launch is, space takes time. On markets, there is no causal link here. I'm just making an observation that one of the very few technology names in the red is Amazon, although it's down 0.5 percentage point. Jeff Bezos on your screen. The relationship with Amazon, who knows? But here's your big moment, Matt.
Right. We're going to let you go, Ed, and we thank you so much for your analysis, although they're just... I know, now we got it. Now we got it. Okay, fine. We got it. There we are. Is that Lauren Sánchez?
I would imagine so.
Leading the crew out.
Lauren Sánchez out first. Nice.
Your babies.
Where are my babies?
They're over here. Go see them.
Where? Oh, we have to go
right there.
Okay.
We've got is pop sensation Katy Perry back on Earth, kissing the ground.
Fireworks.
Baby, you're a firework. All right. Oh. Well, here we go. We'll, I guess, watch the rest of the crew get out, and then we'll get back to markets.
All right. What a moment. Ed Ludlow, it's been great walking through this launch with you. Our thanks to Bloomberg's Ed Ludlow, our own rocket man. You watched, of course, the launch and the landing of Blue Origin's 6 all-female crew go into space above the Kármán line, back safely on Earth. And markets have been open for about 30 minutes now. We haven't done much about them, but you can see the S&P 500 continuing that relief rally that Sonali mentioned, up about 1.3% right now. now.
We're up on almost every sector in the S&P 500. You're also seeing that bid back in the bond market to the tune of about 8-9 basis points lower, and the VIX nice and low relative to what we've seen over the last week. Stick with us. This is Bloomberg Open Interest.
We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katy Greifeld.
And coming up, Goldman's record quarter, the bank posting the highest quarterly revenue haul on record.
Henry McVey, KKR's head of global macro and asset allocation, joins us with his take on tariffs and how China is reacting to the rhetoric.
And today in our C-suite, Greg Schwartz, he's the CEO of sneaker reseller StockX, will join to talk about how he's navigating tariff challenges. All of that and more coming up. Let's get a check on these markets right now. The S&P 500 bouncing back up about 1.25% right now. You have every single sector in the green. You take a look at the NASDAQ 100, big tech obviously feeling some relief today. You can see that Apple, as we had been discussing earlier in this show, definitely feeling some rebound right now. The NASDAQ 100 up about 1.3%. The bond market continues to be interesting. This time, Matt Miller, or rather Sonali, it's rallying. You can see we're still above 440, so the absolute level pretty high, but the speed of the move, we're down about 8 basis points on the 10-year Treasury yield.
Meanwhile, update from Goldman Sachs CEO David Solomon speaking to investors, analysts, saying that he expects more volatility ahead. He also said it is important to recognize that few countries have benefited more from the post-World War II economic and financial order than the United States. Now, all of that is in question as things change, and it's time now for the Wall Street beat. That brings us to Henry McVey. He is KKR's head of global macro and asset allocation, CIO of the firm's balance sheet. And when you think about this unwinding of the post-World War II order, how do you think about the changes to expect for investors, for companies that are trying to navigate this tariff regime?
Well, first, thanks for having me. Pretty interesting times. Look, my base view would be that actually after COVID, the global supply chain started to change. And what we use this term internally at KKR, let's build supply chain resiliency. So things that were just in China or just in Mexico, we typically have 4 or 5 areas where you can get production right now. So I think there's probably more resiliency than you might think. I think what's really weighing on people, though, is the lunging left and right on what the strategy is. I think most CEOs around the world can operate if they know kind of the rules of engagement. You've seen the bond market. Obviously, you guys have covered this well. You've seen that highlight. I mean, to me, what's President Trump trying to achieve? He's trying to achieve lower taxes, deregulation, more power to the states, and then he really wants to address national security around key things such as semiconductors as well as pharmaceuticals. That all makes sense. But you've got to think about how you're going to make kind of communicate that message, because right now we have a 4% current account deficit, we have a 7% fiscal deficit, and foreigners own about 33% of our treasuries and 18% of our stocks. So when you make sudden moves one way or the other, that upsets the apple carts. A lot of the trade rhetoric has really been around the trade deficit. It hasn't been as much until recently around the liabilities. Our analysis at KKR, if you go through it, there are really 4 or 5 countries headed with China at the top that actually have the concentration of the deficit. And then when you look at goods, when you look at the trade deficit by areas, really 3 areas: autos, capital goods, think washing machines, and then what you saw over the weekend, electronics. That's 80% of the deficit. So as we go through this together, and hopefully we'll keep talking about it, those are the areas to focus on. So what we saw on Friday was really around iPhones and computers. That's $50 billion from China, both on iPhones as well as computers, and you probably need some relief there. So I think we've seen 2 Achilles heels on the administration's game plan, even if the long-term objective is good. One is the bond market, and second is on day-to-day household goods. We can't have a stop of production of iPhones. We need to figure out where we want to be. So our base view is we end up with kind of 10% tariffs across the board in many areas, and then we see negotiation and the reciprocal, and that probably will be more fluid. And you were all referring to the VIX. The VIX is capturing that fluidity of those other reciprocal tariffs.
It looks like President Trump wants to get rid of the trade deficit. And what we have now is a situation where, they make stuff for us cheap, we pay them for it, and then they use that money to buy treasuries and U.S. equities, essentially financing this whole thing. What we want is if I understand correctly, we make stuff, we sell it to them, but they still buy our treasuries and U.S. equity. Do they still finance the whole thing?
I think when you let's take a step back. There has been, since China joined the WTO, Matt, that is exactly what's happened. Today, you would say the U.S. is 4% of the world's population, 25% of its GDP, and 65% of the market cap. So it'd be hard to argue that strategy is not working. You can argue about two things, though. One has been the distribution of that wealth, which I think the president has talked about, and second is around national security. Those are the base minimums that I think this administration wants to achieve. We don't know yet, to your point, what the right balance is. I don't think it's that we're going to own all their foreign assets and we'll be selling to them. That just doesn't work in a world where you have comparative advantage globally. So I think we're figuring out that balance. What you're highlighting, though, and the reason we've had so much volatility, is that most global investors, when you think about big sovereign wealth funds, they've been overweight the U.S. since COVID, because we were the country that was stimulating the most. We had the best market performance, and we were ahead on AI. But they also have international liabilities, whether it's Canada, China, Europe. And when you go into a world where equities go down, bond prices go up, and the dollar weakens, that sets off risk problems for firms. They're set up in a world, if you think about asset allocation theory, stocks and bonds are supposed to diversify each other.
Right.
Everything that you guys have been reporting about is the exact opposite, right? The dollar's gone down, equities have gone down, and bonds go up. That is a very unsettled market for big global allocators that are trying to create retirement savings. And so that's something that I think in this new world order, I don't think it's going to get fixed overnight. I mean, I think this is going to be a really busy time, not just this week or next week, but probably the next 6 or 12 months. The offset of that is that, again, I would say what we saw since COVID is supply chains are better set up to do this. And second is, when we see this in our 175 portfolio companies, we come into this supply shock with pretty good momentum, right? Our economic models at KKR were saying that GDP this year was supposed to be 2.9%.
Right. Well, Henry, I do want to talk a little bit more about the bond market. And of course, you'll be sticking with us through the next block as well. But you think about the reaction that we saw in the bond market, the violent reaction, and the Trump administration's response to that. It really acted as a braking mechanism. And you could make the case that the Trump administration, when it comes to trade policy, isn't necessarily negotiating with China here, but negotiating with bond investors, because that seems to be sort of, again, the braking mechanism on how aggressive they can be on trade policy.
I definitely agree with that viewpoint. Nobody beats the bond market. I mean, there's a term when I was coming into the business, and we saw this with Rubin and Clinton, the bond vigilantes. They won in the 90s. And if you remember, that actually created a calm. What we saw under Liz Truss in the UK and what we've seen recently is when you think about changing your cost of capital by moving too fast and the market lets you know, that's unsettling. One of the big things, I've been to Mexico, I've been to China, I've been to Europe and to the Middle East. There's a global movement, even before President Trump's announcements, to lower your cost of capital. There's a blurring of economics and national security. Let me say that again. There's a blurring of economics and national security. And what you're talking about is that blurring. Everybody wants to keep their cost of capital lower. And when it spikes, you get an immediate reaction from governments around the world. That is something that we haven't seen for the last 20 years. We all grew up in investing in a world of low growth, low inflation, tight fiscal, loose monetary. Rates were low. And every time we had a shock, what happened is the central banks and the fiscal impulse could come in. That's totally different than what you guys are reporting on and what investors are digesting. And so I think you're highlighting a really critical point.
Henry, you're sticking with us. That is KKR's Henry McVey. I want to bring you some breaking news as well, because shares of Fannie and Freddie are on the move, much, much higher. And it's on the heels of an ex-post from the U.S. Director of Federal Housing of the FHFA, that is Bill Pulte, who had tweeted about 6 minutes ago that there will be news on Fannie Mae coming shortly. Now, remember, there had been a Wall Street Journal report that had said a number of days ago that the Trump administration is considering an executive order on housing that might push for privatization. But of course, a lot of investors are very concerned about the high mortgage rates, at least relative to recent years, being experienced more recently on the heels of a higher 10-year yield and longer-term financing rates. Now the shares quicker on the upside, more than 13%, but still no real news, guys.
All right, we'll continue to wait for that, as Pulte says we should, and obviously investors bidding those stocks up. Let's get a look at the other stocks moving this hour. For that, we go to Bloomberg's Isabel Lee. Isabel, what are you watching?
I'm looking at Apple. It's edging higher by more than 4%. So Apple has managed to dodge the latest crisis since the pandemic, at least for now. So President Donald Trump's 125% tariffs on Chinese goods threatened to upend Apple's supply chain. We know that Apple still largely relies on China for its production capacity. But on Friday night, we have Trump exempting many popular consumers, including Apple. So basically, they handed Apple a victory, and this includes iPad, Apple Watch, Macs, AirTags, and we have KeyBank upgrading the stock from underweight. They said that this is basically the best case scenario, and Apple is now on track for back-to-back gains of more than 4%, according to Bespoke Investment Group, and it's also the fifth straight day where the stock has moved more than 4% in either direction. So if this holds to the close, it would go down as the longest streak of moves in that size since 2001.
Isabel, what's Goldman doing? They look like they're off of their highs of the day, but still higher.
Still higher by 1.3%. So Goldman Sachs stock traders basically post their highest record trader haul ever. So they really benefited from the volatility that emerged from this whole tariff global trade war that's really roiled financial markets. We have equity trading revenue rising 2.7%. And this builds on the sector's momentum last week. It follows peers like JP Morgan and Morgan Stanley, which also notched record stock tradings in the period. Even so, we have CEO David Solomon calling for more clarity when it comes to this, even if the volatility is good for their business.
Yeah, absolutely. And you can see, again, shares up 1.5%. I want to talk about Pfizer a little bit here, Isabel, because it's actually a little bit higher right now, which might be surprising given that they're abandoning their obesity pill efforts, at least in their current form.
Exactly. So stock is kind of seesawing, but now it's up by 0.5%. So Pfizer will stop this pill that's been closely watched by investors because its rivals like Novo Nordisk and Eli Lilly really dominated the space. They're blockbuster pills. So the treatment, and I'm going to try it, is called danuglipron. So it was linked to a potentially drug-related liver injury in one of their trials. Obviously, the company said it won't advance that. And before, Pfizer also has made obesity market central its post-COVID comeback, and they also experimented with that, which also led to not so good results. So, but for now, they're abandoning it, but stock is edging slightly higher.
Well, we hope you don't try it, Isabel, because you don't need it, and frankly, it could cause liver issues. Isabel Lee talking us through some of the stock moves. Coming up later today, an exclusive interview with U.S. Treasury Secretary Scott Bessent out of Argentina. That's one you don't want to miss. This is Open Interest. Let's get now to high interest. Look what's making headlines around the world. A Blue Origin rocket lifted off carrying pop star Katy Perry, TV personality Gayle King, and Jeff Bezos' fiancee Lauren Sánchez on a trip to the edge of space and back. The flight launched last hour around 9:30 New York time from West Texas on a roughly 11-minute trip. The flight is Blue Origin's 11th human space flight. Nvidia announcing it will make AI supercomputers entirely in the U.S. The company says it'll be the first time AI supercomputers are completely built in America. The announcement is part of the chip giant's recent pledge to spend several $100 billion with its partners on U.S. AI infrastructure. And Goldman Sachs CEO David Solomon on the company's earnings call today said, quote, "Few companies have benefited more from the post-World War II countries have benefited more from the post-World War II economic and financial order than the U.S. Goldman is reporting record profits this quarter and a share buyback program of as much as $40 billion. That company benefiting as well. We are back now with Henry McVey, KKR's head of global macro and asset allocation. And we were talking a little bit in the last block about the tariff effects and rates. Let's talk a little bit more about your business specifically. Okay. Now, there's been real excitement in a sort of a morphing of your business model in that you'll take revenues from steady businesses and invest them in very long-term steady businesses, kind of like a mini Berkshire Hathaway. How do you see it?
We have probably the largest global private equity business. We have 3 distinct funds across the Americas, Europe, and Asia. So that's our traditional, operational improvement, make those businesses better. We also have a longer-term hold strategy called strategic holdings that you reported on, and those are businesses. Just think about something like 1-800-CONTACTS or insurance broker, USI. Those are things that will hold longer, and so there's probably less operational improvement, and we've reported that now as an individual segment. So what we're trying to do at KKR, Henry Kravis and George Roberts started this business in 1976. We have a massive funnel globally. And so everything from what we did with Henry Schein in the U.S. around private equity to, you're going to see, we've been pretty busy during this volatility, so stay tuned. There's some really good operational improvement stories in our traditional private equity. And then we'll also have some things in what we call core private equity or strategic holdings that will own those for a longer term. We're doing those with partners, and it's just a different strategy, but I think it makes sense in a world where you want to just hold those assets for longer and watch them compound. I mean, compounding capital is the 8th wonder of the world, and private equity is a pretty good vehicle for doing it.
Well, let's talk about that a little bit more because, Matt brings up Berkshire Hathaway. You think about the champagne problem that Warren Buffett has is he has all this cash and nothing to spend it on. It sounds like, though, that you're not exactly running into the same problem.
Yeah, we watch Berkshire Hathaway closely. They've got a lot of cash. He's been issuing bonds in Japan. KKR has been issuing bonds in Japan. A lot of times people think about our U.S. franchise. We're probably the biggest player in Japan in private equity. There's a huge market for corporate carve-outs. We also bought a real estate manager on our balance sheet. That's helping to unlock a lot of value. For those that have been around a lot, it feels a lot like the 80s and 90s in the U.S. private equity in Japan. So,
one part of your business I'm really interested in is how far can this trend go? When you took that stake in Henry Schein, now we're talking about public equities, not just private equity. How many public equity stakes is KKR willing to take, especially now that we've seen a correction?
I think sometimes on private equity, let's think about a hedge fund that's moving in and out. Our co-heads of global private equity, Pete Stavros and Nate Taylor, we do 5 to 10 transactions per year. But when we do it in size. I think what you saw there was we were kind of a white knight, right? There's a lot of activism that you're reporting on. Sometimes these companies want to deal with a firm like KKR that does operational improvement. By the way, we probably buy a lot of those goods in our 175 companies. So there's some things that we can bring to the table. So we are looking for control positions where we can drive the outcome. And I think you'll see us do more of that. Just to Sonali put an exclamation point on it, the last 12 months, we've been the busiest ever on public to privates in infrastructure and in private equity. And I think Henry Schein is probably a new chapter in the way we're approaching some of that.
Are you looking at investments at this point in time that might be somewhat tariff-proof or immune to some of the more challenging macro forces that we've been talking about?
Yeah, I serve as the CIO of the balance sheet, and I head our macro effort. What we're trying to do is actually take the macro out, right? A lot of times the market gets offside, either too bearish or too bullish. We want to solve for the left fat tail that things are going to be a problem. But I would just go back to what we said earlier. We have KKR, the Global Institute, with General Petraeus, Ken Mellman, and me. We've been focused on this stuff with our deal team since COVID. So I don't think you're going to see a major announcement from KKR that this is a huge surprise. Obviously, we're constantly navigating this environment, and it's very fluid. But a lot of our supply chains, as I mentioned earlier, have diversified. So we're trying to create resilient businesses. You have an edge in the operational improvement, and you're not being 100% beholden to one supplier. And so I think you'll see some companies that do have that. That's probably not going to be our call to arms, though.
We're looking forward to the headlines. Henry, thank you so much for joining us.
Always great to see you.
Thank you. Night.
Okay.
Great to spend some time with you. KKR's Henry McVey. Katie, you want to take a look at what's going on? Markets are calm.
Yeah, they are calm. The S&P 500, it's up about 1.2%. What stands out to me is that volume is pretty muted right now. On the S&P 500, trading volume is about 5% below its 30-day average. We know it's been a very busy 30 days. But again, that relief, that sigh of calmness coming through these markets and actually bringing it higher after that huge rally that we saw last week. We'll bring you into the sector news next. This is Open Interest. All right, welcome back to Open Interest. We do have an update on what's going on with Fannie Mae. Pulte tweeting that Ahmed Malik will be joining the board of Fannie Mae effective immediately. You can see that shares of Fannie Mae and Freddie Mac are still higher right now, but they had been higher by double digits. Here you have Fannie Mae, and you can see that this big spike that we had, there was maybe some optimism that we were going to get some news about privatization. Not exactly, a little bit of a letdown, and you can definitely see that in the shares. But let's look at this broader market right now. If you take a look at the S&P 500 breakdown, you can see that the breadth is pretty big. You have 445 stocks that are higher right now, just 55 lower on the day. And if you take a look at the points basis, what's driving this index higher, you can see it's Apple, it's Nvidia, and that brings us nicely to these sectors. If we take a look at the sector breakdown specifically, everything is in the green as discussed. But you guys, if you take a look at what is in the driver's seat right now, it's infotech up 1.8%, and it's communication services up 1.5% as well, Matt Miller.
Yeah, you know, it's interesting that Apple it isn't doing better today. I mean, it's up 3.4%, but you would think after that reprieve that the company got, don't forget, they make 90%, according to Dan Ives, 90% of their iPhones in China. So if they had been forced to deal with 145% tariffs rather than just 20%, it would have been, I think, a death knell for the world's largest company. I'm actually surprised that they weren't down more last week. They were up 5%, 4% on Friday.
There's a few things that I was watching in addition to that, too. We had that Nvidia announcement, pretty incredible this morning, about moving more to the United States. So something is happening on the heels of these tariff talks. I'm also watching, guys, this got kind of missed under the surface. I want to point it out because Ed Ludlow had been, and its Palantir is rising quite meaningfully this morning as well. And that's because NATO acquired an AI-powered military system from the U.S. software firm. And I would just say that that defense tech is still a hot story.
There you go, and you can see that in the shares as well. Though it feels like everything is up today, but that includes Palantir up about 6%. Now, coming up, we'll get a read on the state of sneakerheads as global uncertainty hits the consumer. Greg Schwartz, he is StockX president and CEO. He joins us next. This is Open Interest. Well, as uncertainty ripples through retailers, specialty stores may face a major crunch. Sneakerheads have been flocking to StockX for nearly a decade to get their hands on the latest releases. Now, the online marketplace is facing risks of a slowdown as those consumers begin to tighten their wallets. Joining us now live from Detroit is Greg Schwartz, StockX president and CEO. And Greg, that's where I want to start because sneakerheads, they're very loyal, they're very dedicated to getting their hands on new releases, but it is a discretionary purchase, you know, buying these shoe drops and even resale as well. I mean, I wonder how that's hitting your average customer on your website.
Yeah, what's unique about StockX is we have a dynamic pricing model. Pricing is purely based on supply and demand. So when we see periods of consumer caution, you'll see average order value on the platform maybe drop a little bit, but you still see tremendous liquidity. And that's really what we saw over the last couple of years. As Nike and other brands were oversupplying coming out of the pandemic demand boom, we ended up seeing prices being dictated by the buyer slightly lower in many cases than retail, but still a lot of consumer interest because there's always consumer demand for the hottest, rarest items across a lot of the unique brands.
Talk to us about the items that aren't affected by tariffs. I mean, we were looking at video there of someone folding up shirts, and when I think of StockX, I think of sneakers. I think of, you know, Grateful Dead Nike Dunks. But those are obviously all going to be made in Asia, and that's not changing. So what are the things that you sell that are maybe not going to be hit by big tariffs?
There are a lot of products manufactured, of course, in China, of course, in Vietnam. Again, what's unique about StockX is we're a global exchange. We're connecting buyers and sellers on any given day across 5,000 different global trade lanes. So when we saw tariffs go into place a few weeks back before they were reverted back, what we saw was a larger pockets of intra-region trading. So really similar products still trading throughout the tariffs ups and downs, but you see pockets of intra-region trading. And then because tariffs tend to impact primary retailers, really manufacturers more than a secondary marketplace like StockX almost ends up being a release valve. If the prices go up because of tariffs, consumers might not be willing to pay that price, but they're going to come to StockX and they're going to say, here's what I am willing to pay. And that might be a lower price point, maybe lower than retail. And StockX ends up being almost a liquidation channel in addition to just higher resale premiums, which we've seen historically.
You know, you go to your website, then you go to the brands, and then you see what's trending. And it's Louis Vuitton, Gucci, Balenciaga. And one thing that we learned last week from the University of Michigan Sentiment Survey was that even customers, even consumers who were on the upper ends of the income bracket started to feel pinched. Is there anything that shows that across your platform?
Over the last couple of years, average order value absolutely has come down. We've seen a more cautious consumer for sure. I'd say the first quarter of this year was promising for Nike and Jordan brand, key brands on our platform. It was the first time in several years where we actually started to see average order value start to tick back up. And we think that was a promising sign of Nike starting to put better product into market, hopefully starting this next chapter as they return to innovation, better collaborations, more scarcity product. So it has been a couple years of lower AOV, but through Q1, we saw growth on the platform, and not just Nike, brands like New Balance and apparel, it's new denim tiers and Spider, all really seeing really nice resale trends and resale premiums.
Well, let's talk about that a little bit more, specifically when it comes to Nike, because that has been the story, that Nike is losing share, not just among the running community and others, but also among the sneakerheads that you cater to. You mentioned New Balance, but what are some of the other brands that are sort of rising to fill that void that Nike might be leaving behind?
As Nike's lost share, we've seen a tremendous diversity across brands. New Balance doing incredible collabs. ASICS is a brand that's been surging on our platform. Hoka on. It's really been incredible to see other brands taking share from the traditional incumbents, which have been Nike and Adidas. So while Nike has weakened over a couple of years of really incredible oversupplying, which has driven a discount cycle for Nike, we have seen other brands take share. And it's not just sneakers. We're seeing really interesting trends as apparel, as collectible brands like Pop Mart start to apply the same playbook that Nike really put into place decades ago. Limited release strategy, really powerful collaborations. There's always going to be consumer interest no matter what the environment is. And that's why we really see a resilient consumer. But yes, much more brand mix and diversity.
So what are the hottest collaborations? I mean, can you name a few for us? I can't imagine Hoka teaming up with anybody cool.
What are you talking about?
I mean, it seems to like be a grandmother, but I know that you.
We both wear
I know that you guys wear Hokas.
They've really made inroads in the professional running community by sponsoring up-and-coming athletes.
But
That's how I found
But we're
Hokas.
not going to see a supreme version of On Cloud shoes, are we, Greg?
You know, you never know what you're going to see. I'd say right now, New Balance with ALD, which is a boutique out of New York, which is really interesting, still putting out really cool products. You see collaborations. You see Jordan Brand with Union, which is one of the higher resale premiums, the highly sought after items this quarter. I'd say waking up this morning, a hot item, not necessarily a collab, but you saw Rory win the Masters and the Nike Air Zoom Victory 4s, and that's just an incredible sneaker. And all of a sudden, Rory wins the Masters wearing these sneakers, and we see trade volume soaring on StockX across that product. So it's collabs, it's what's happening that's relevant in the moment. All of these things end up dictating what's hot on StockX on any given day.
Greg, we thank you for your time. That is Greg Schwartz of StockX. And of course, we did spend all morning, I don't know how many times Rory McIlroy has come up, but I've been hearing about it since last night. So congratulations over there for the Masters win.
Yeah. We should try and get him in. You know, when Jordan Spieth, I'll never forget when Jordan Spieth won the Masters for the first time. He came in here and they had like a mini putting green set up with Stephanie Rule and Eric Schatzker.
Rory, if you're listening, please come in. It was interesting to see him win because, as I understand it, it was touch and go towards the end there, but Rory clinching the Masters. Meanwhile, let's get a check on these markets right now. Again, volume pretty light, of course. It seems like folks are happy to just take a breath. It's been a wild couple of weeks, and we're still awaiting some further detail when it comes to tariffs. We're waiting to get into the thick of earnings season, and the S&P 500 up 1.5%, Matt Miller. A lot of folks would be happy with that.
Yeah, absolutely. We're still not back to the lowest levels reciprocal tariffs that like Mike Wilson was calling for, right? He said 5,500 would be the floor, and was the bear. So this is still going to hurt people's. If you look at your 401k, you're still going to be disappointed.
Yeah, don't do that. But it's an important point. We are still down 8.8% or around 8% when it comes to the S&P 500 so far this year.
Silver lining, I think people are looking for what can be the next catalyst. To your point, we've sold off a lot already, but almost every sector today is in the green. So a little bit of silver lining there.
Yeah. When we go to break, we'll talk about what silver lining means. Because I think it's something different than what you think it means. But there are positives, I think, is what you're trying
we do have some movers,
to
don't
say.
we?
We do. Let's get a look at some of the stocks moving at this hour. First up, shares of Nvidia are higher after saying they're working to produce AI supercomputers entirely in the U.S. This is one of those headlines that I love. It means almost nothing. Nonetheless, it's planning on ramping up production at its Texas plant in the next 12 to 15 months, and the shares are up almost 2%. Palantir is absolutely soaring after NATO acquired an AI-powered military system for use within its allied command operations, and Goldman Sachs climbing after posting its highest quarterly revenue haul on record, just like the other banks have reported. We'll take a deeper dive into those results next with Sri Natarajan. Stay tuned for Sri. This is Open Interest.
Now, Goldman Sachs traders capitalized on market volatility last quarter with equity trading revenue up 27% year over year, bringing in their highest quarterly revenue haul on record. Joining us now for more, Bloomberg's chief Wall Street correspondent, Sridhar Natarajan. You know, I found David Solomon's commentary quite industry. He's telling clients to go slow, take a pause here. That's not what you think you would hear from somebody who would want to make fees from client activity.
I guess that's how you become the #1 M&A advisor, by trying to tell them when not to pull the trigger on deals, because he is right. Right now, we don't know what policy regime we're in. There is obviously a lot of uncertainty, perhaps less so today than the start of last week, but there is no doubt that over the next few months, as the clock ticks on the 90-day pause and what happens beyond that, it isn't really clear how companies should plan ahead. And if you have an M&A banker, if your merger banker at any of the big banks is suggesting this is the time to go ahead right now and blow through all your deals and everything that you're planned for the year, that's when you should be worried.
Okay, so take a beat here. I do want to talk a little bit about trading, because we referenced the big numbers that the stock traders put up, but when it comes to FIC, a little bit underwhelming.
Yes, I mean, look, when there is volatility like this, you generally tend to see much more progress on the equity side of the business and less so on FIC. On equities, you're really moving at a faster pace, and it is always helpful for banks when things are moving quickly. That's not always the case with all FIC products. So equities was clearly the highlight of this quarter, not just for Goldman Sachs, but also Morgan Stanley, also JP Morgan. Goldman Sachs did come out again, but I would say it would still be a little less impressive than, say, the other guys, only because their lead, their dominance wasn't as good as it was a year ago.
Sridhar, we appreciate your time so very much. That is Sridhar Natarajan of Bloomberg News. And it's interesting, guys, Goldman also authorized a $40 billion buyback program. And Gerard Cassidy this morning over at RBC had said that the peak level of shares outstanding for Goldman was in the first quarter of 2010, right after the financial crisis when they were issuing equity. It has dropped 45% since then. My question is buybacks going to be a huge theme of this earnings season? Buy low is the question.
Yeah. I mean, buybacks they announced are literally 25% of their entire market cap.
Yeah. Incredible. So that could be a theme. Also, perhaps companies suspending guidance. That seems to be one of the expected ones. But we've been talking a lot about Apple, and Apple is your biggest points contributor to this big rally that we're seeing in the S&P 500 right now, Matt.
Yeah, I want to bring in somebody who knows more about Apple than any other person I know of, and that is Mark Gurman, normally in San Francisco. He is here today in New York City on set with us. Mark, great to see you here. I am surprised, and I think after I saw the headlines on Friday night, I was so surprised that we didn't write the story, Apple is going to die on Thursday, right? Because if they have 145% tariffs to face on Chinese goods, and this is essentially a Chinese company in terms of production, right? They can't sell anything globally.
Yeah, they were in trouble. They were on the brink of a crisis if this held. I think the expectation was that this would not hold. So here was the plan. Before this exemption came into place, they were really looking at repurposing their India operations to become basically their U.S. operations in terms of supply chain. Right? They were trying to quickly get to a point where they can build basically all the iPhones they needed for the U.S. in India, which throughout this process, all indications were to have a much lower tariff than China. Then this exemption came into place. The 145% was removed, and we went down to the 20% that's just around fentanyl and stuff like that. Now Trump and Lutnick, they're all saying that there's going to be a new tariff for devices with semiconductors, which obviously would apply to the Apple products. But all things considered, it's very likely that's only going to be a slim percentage of what that 145% would be. So, in other words, with this exemption, Apple avoided its biggest crisis and supply chain issue since COVID hit 5 years ago.
Yeah, and I'm glad you brought up India because Apple makes about 20% of its iPhones in India, we've recently reported. But I want to get into the relationship of Tim Cook with the president. Tim Apple, as I think he called him in his first administration. I mean, how open is that dialogue?
Yeah, I mean, it seems like Tim Cook and some of the government affairs people at Apple, a guy named Nick Amon, they have a very open relationship with the Trump administration. They've been lobbying them hard over the past couple of weeks on these tariffs. I mean, this would have been destructive to Apple. It would have raised prices probably by a few $100s at least. It would have created all sorts of supply chain issues for them. They've been preparing for this. We just put out a story that according to the latest data, iPhone shipments surged 10% between the beginning of January through March. Wow. Not because people were buying more, but because Apple was stockpiling their U.S. channels. This was something we reported on a few weeks ago. Not only Apple, but Meta, Google, a few other companies are doing this. They were stockpiling because anything you had stateside when tariffs hit, it wouldn't be subject to that tariff. Now they have a little bit of breathing room. There wasn't much breathing room. Apple's operations people were burning the midnight oil on this the past several weeks. They had the India plan in motion. They needed to ramp up production big time there. Now they have a few more weeks to figure out how they're really going to do this, how they're going to spread things around to avoid major price increases.
What's the best way to describe the impact to the consumer? Because maybe it's not as bad as it could have been, but is there going to be a significant impact overall? And I would point out, even though with Apple's rise today, it's still down almost 18% on the year.
Here's the biggest problem. It's the fluctuation. We're sort of on a roller coaster. One day they're going to have to move everything to India. One day they can stick to China. One day they're going to have to move everything to the US. We really don't know. So it's hard for Apple at this scale with this many units on the line to make these adjustments because they don't know what's going to happen between Monday and Tuesday and Wednesday and then to the following month. It's all very sporadic. So it's very difficult to get a sense of what they're going to do. In my view, the best thing they can do is diversify the supply chain, keep working towards that. Right now, they're diversified across a few countries in South Asia, right? The iPhone primarily is China and India, but they got to get the iPhone into more places. There's a line in Brazil right now. It's very small, so maybe there's going to be some talk of expanding that. Maybe they can do some production in Mexico, but certainly they need to go global and really copy the model they built. The India situation, people don't understand why India became a thing to begin with. It's because of tariffs also. India was going to put a massive tariff on Apple for exporting iPhones from China to India. Apple wanted to break into India because they know this is going to be this big market into the future. So they had to build production facilities in India to not get that tariff. Now they're using it to avoid tariffs elsewhere.
But are they going to eventually be building iPhones in like the Raleigh-Durham area? Are they going to put them together near Cupertino? Is Texas the right place? I mean, will they do it in America, Mark?
I don't think there's going to be an iPhone built in America this decade, maybe even the next decade. I think it's going to take a while. The iPhone, you're not going to believe this, but there's a lot of handmade portion into this. The iPhone design doesn't change a lot these days, but any new color, any new tweak they make, a slightly bigger camera, it means they need to retool the line. That's something that Apple engineers are actually going to China. Lots of Apple engineers spend a lot of their year in China re-architecting the line to produce these things. If you have a robotics and automated-based facility, that's something that Lutnick has talked about wanting and other people as well, you can't adjust machinery to new designs as quickly as you can adjusting lines by hand. So they're in a bit of a pickle.
Right. That's really interesting, just the physicality of it all. Mark Gurman, great to see you on set. That is Bloomberg's Mark Gurman. He covers all things Apple for us. Apple shares still higher, but they were higher by about 7.5% earlier, so coming back.
Did you read Power On this week?
Of course I read Power On.
I'm excited because these glasses don't have a camera or any kind of intelligence at all.
I wasn't going to say anything, but, you know, a little
And I don't want to get the meta version.
Yeah.
But I'm thinking now that I read Power On, I can wait for the Apple.
The future is bright.
Yeah.
Now, coming up, Treasury Secretary Scott Bessent is traveling to Argentina today, and we're going to be live from Buenos Aires next. This is Open Interest.
Treasury Secretary Scott Bessent is in Buenos Aires today, meeting with Argentina's President Javier Milei and Economy Minister Luis Caputo. Bloomberg's Anne-Marie Horderin is also down there, and she's going to sit down with Bessent for an exclusive interview. She joins us now for a preview of what we can expect. Anne-Marie, great for you to get some time with Bessent, and we're all going to be glued to this interview. What are the main things that you want to know about? I guess tariffs for sure.
Yeah, tariffs for sure, especially as the Treasury Secretary is really taking now the lead when it comes to tariff negotiations. Very different than when I spoke to him less than 2 weeks ago after what the president called Liberation Day. And he told me at the White House that he really wasn't involved in these negotiations. So as Neil Dutta put it recently in a note, Donald Trump is going to crack a few eggs, and it's Scott Bessent's now time to make an omelet. So trade will be a key part of this interview. Also, I've been fielding a lot of calls and emails today when we told our viewers that I'll be sitting down with the Treasury Secretary, and I keep getting this question: why is he here? Well, the IMF in Argentina inked a $20 billion loan on Friday. Some of that actually is going to be front-loaded. $12 billion they'll get on Tuesday. So part of this can also just be a show of force, especially for someone like Javier Milei, who's been a strong supporter of President Donald Trump, one of those handful of world leaders that showed up to his inauguration.
I love what you were saying earlier as well, and I read that Neil Dutta note too. If the president is cracking an egg, then Bessent is making the omelet, and it's a hard omelet to try to make at this point in time. But the point you were making before was excellent, which is that he used to be on the other side. He used to be the man here that was looking through the window to try to get the clues. So what is he going to start signaling now that he is in the driver's seat? Do we have any hints?
Well, I think what you're going to want to hear from the Treasury Secretary, the market certainly wants to hear, is a little bit more of a roadmap on where these trade deals are going. He's going to be in Buenos Aires today. Maybe we'll get some details on what the 10% tariff rate the United States put on Argentina means. Argentina is a very protectionist country, though, so are they willing to lower their rates when it comes to U.S. products coming into this country? And then, of course, the rest of the week is going to be very trade-driven for this Treasury Department.
Right.
They're sitting down with the Japanese this week, as well as sitting down with the Spanish economy minister after the Spanish prime minister went to China. So I think you're going to hear a lot on trade this week, specifically when it comes to this administration. Remember, they have 90 days in this pause to try to ink some 70-plus deals.
And Anne-Marie, we only have a minute left with you, but as you mentioned, it seems that Treasury Secretary Bessent taking the lead here in these tariff negotiations. Where does that leave Commerce Secretary Howard Lutnick? Because wasn't his role designed to be more focused on these trade policies?
Well, I think what the administration will tell you is that it's going to be a group effort. When it comes to Japan, it certainly looks like it's going to be Scott Bessent and Jamieson Greer, the ambassador, the USTR trade representative, taking that lead. We have seen Secretary Lutnick sit down with his European counterpart. And we should note yesterday, this exemption came out when it comes to smartphone, laptops, electronics. Howard Lutnick went on TV and said, well, actually, it's exemption for only right now. They're going to be a 232 investigation when it comes to things like smartphones and semiconductors, and that sits squarely in the Commerce Department.
Anne-Marie, great to get some time with you. Really looking forward to this interview. Anne-Marie Jordan there in Buenos Aires. Be sure to catch her exclusive interview with Treasury Secretary Scott Bessent. That's at 4 p.m. New York time, and it's definitely one you do not want to miss. I imagine it'll be simulcast on radio as well.
I would imagine so, and we'll see if markets hold this rally up into that interview. You can see the S&P 500 close to session highs, up about 1.6%, but we know the day is young, Matt.
All right, coming up tomorrow, Sinead Colton joins us from BNY Mellon. David Kostin of Goldman Sachs.